Hello and welcome to the Business Standards Morning Show. I'm Kanishka Gupta and let's have a look at the stories for the day.
इस बार मनाली चलते हैं।
नहीं गोवा।
We Indians disagree on everything, but we agree. SBI is the banker to every Indian.
SBI से ट्रैक्टर लोन लिया, पाजी ये 100% सही किया।
SBI is the banker to every Indian.
In 2011, when 3G was still running the show and 4G was waiting in the wings, the government embarked on a mission to provide broadband connectivity to villages. The entity set up to carry out the mammoth task, Bharat Broadband Nigam Limited, is now being merged with BSNL. Will this merger address the problems plaguing the project and expedite it? Our next report offers some insight.
A flagship scheme of the Digital India campaign, the ambitious Bharat Net project, launched to connect India's Gram Panchayats with high-speed broadband, has long been marred by delays. It was started in 2011 as the National Optical Fibre Network and was later renamed in 2014 as Bharat Net when the Narendra Modi government came to power. And in 2012, Bharat Broadband Network Limited, or BBNL, a special purpose vehicle, was set up to implement the project. But over the years, it has earned a dubious reputation for missing several deadlines set by the government. In the first phase, BharatNet was to connect 1 lakh village councils by 2013. The target was instead achieved 4 years later in December 2017. The government aimed to connect the remaining Gram Panchayats by March 2019 in the second phase using a mix of state-led, CPSU-led and private-led models. But the deadline was again pushed. Now, the government has set a revised target to connect all the 6.4 lakh villages spread in 2.6 lakh Gram Panchayats across the country by 2025 with a minimum broadband speed of 100 Mbps. The government recently informed Rajya Sabha that it had connected just 27% of the villages till March this year. Of the 33 states and union territories for which data is available, 15 had a connectivity rate of less than 20%. Only Chandigarh and Punjab had achieved over 90% coverage, and just 8 states and UTs had been able to make over 60% of their villages service ready. The cost of laying the optic fibre has also been escalating. In 2020-21, the government spent 6.9 lakh rupees to lay 1 kilometer of optic fibre cable, which increased to 13.6 lakh rupees in 2021-22. The total approved outlay for the BharatNet project is now 61,109 crore rupees. The government last month cancelled a 19,000 crore rupee tender to lay cables for the project in 16 states under the public-private partnership model after it failed to attract any private bidder. Over 50 companies showed interest, but none came forward eventually. After the failed tender, the government decided to merge BBNL with the loss-making state-run telecom company BSNL. In the past, the performance of BSNL in implementing BharatNet projects under the CPSU-led model had been poor because of its financial condition. BSNL Chairman and Managing Director P.K. Purwar, when asked about the probability of meeting the 2025 rural broadband deadline, sought government handholding while emphasizing that it is not a commercial venture. BharatNet is funded by the Universal Service Obligation Fund, which gets part of private telcos' money in a revenue sharing arrangement. BSNL, as the custodian of the USO fund corpus of over 58,000 crore rupees, said it would ensure that all such assets are made available to all service providers on arm's length principle.
Go back to 2002 when the whole USO thing was conceived. From then on till now, almost about 20 years of the existence of USO funding for common projects to take connectivity to the remote areas and 600,000 villages. It's been a project that has been going on for 20 years. Okay, so that I think by itself answers a lot of questions. So we have one unit which has not been great at implementing the mandate, being merged with another public sector unit, which also has a checkered background in terms of its ability to provide connectivity. If you look at what it has done with 4G, I mean, more than half a decade or more of 4G coming in, and now everyone's planning to move to 5G. BSNL still has not been able to get 4G off the ground. So with that kind of history, I will keep my fingers crossed about the prospect of both the entities being merged and really coming out with something more implementable. I think somewhere before making a decision that the government has taken, they could have actually gone to TRI and asked for an updated consultation and recommendation on what needs to be done with BBNL. So I'm not sure on what basis the government has taken a decision. Has there been a proper assessment of the viability of the entire USO funding and BBNL implementation issues? Bharat Net project is basically a result of contributions made by the industry, which is the 5% of the revenue. Now, if proper TRI consultation would have been done, the industry would have also had some say. They could have come out with more recommendations about the best way to move forward in order to make BBNL a more viable project than it is.
Another industry expert told Business Standard on the condition of anonymity that realistic plans and budgets may improve implementation on the ground. He said the merger could work conceptually, but BSNL will face challenges in running a high-technology consumer-facing service competently post the merger. With experts being skeptical, it is anyone's guess as to whether the merger would lead to BharatNet program being implemented in a better way.
सब अच्छी दिख रही हैं यार, कौन सी खरीदूं? ये तो वही बात हुई, 4000 शेयर्स लिस्टेड है, कौन सा लूं? वो तो सबसे आसान है। तुझे 5 पैसा नहीं पता?
अब तो सबको पता है। 5 पैसा पर है 4000 स्टॉक्स की रिसर्च, टेक्निकल टूल्स और इन्वेस्टमेंट आइडियाज। डाउनलोड 5 पैसा नाउ।
अब तो सबको पता है, investing made easy and rewarding with 5 paisa. Investments in securities market are subject to market risks. Read all the related documents carefully before investing.
The merger may or may not address the problems plaguing the Bharat Net project, but India's first gas exchange has indeed fixed a lot of them. Indian Gas Exchange, or IGX, was set up 2 years ago to free up pricing of domestically produced natural gas. In an interview with Business Standard's S. Dinkar, its director Rajesh K Mediratta tells more about its journey so far. Let's listen in.
We have with us today Mr. Rajesh Mediratta, the MD and CEO of the Indian Gas Exchange. What was the purpose behind setting up IGX, and how exactly did it happen?
We started working on IEX in 2007, and basically what we did in the whole process of putting this exchange in place is that we brought the IT enablement of the trading system. There is too much of processes involved, too much of overheads, and then the whole thing is not transparent, because what you do, you really don't know what you are doing is the best price. But when your system has grown and there is so much of diversity of sellers and buyers, similar thing in gas also, there are so many marketers are there, so many LNG importers are there. So all of that, it's difficult to have the best competitive rate. You can't be sure what you are getting is the best price. So that is what we saw, that this market lacks a transparency. This market lacked the ease of doing business. And we thought that if we bring our platform to this sector, this definitely will give a lot of value to the stakeholders. And this is also what we have seen in last 1 year. So Minister himself was inaugurated our platform in June 2020. That was not a regulated platform, but it was just trading platform. And later, government mandated PNGRB to regulate the exchange, and PNGRB further brought regulations in place, and then we applied for approval, and we finally got approval in December.
How do you see the progress made by IGX since inception? What kind of growth have you seen in liquidity and trades? Do they meet expectations?
See, we started really in real terms in December 20. we really saw a good growth in the volume. So every quarter, we actually tripled the volume. In the first quarter, we did something like 3,77,000 MMBTU in the first quarter. Next quarter, we moved to almost 10 lakh. Next quarter, we moved to 36 lakh. And this quarter, we are completing something like 71 lakh. So this kind of volume is showing that people have valued the transparency which we brought in, competition which we brought in, ease of doing business. Sellers are also like big PSUs, so you can say BPCL and then GSPC and GAIL and then ONGC is also going to come. IOC is going to come. So all these sellers are so big, but still they prefer to sell through exchange because we give them assurance of payment, no running behind the buyers, and in number of participants also. We started with maybe 12, 13 of members. Today we have 26 members. And almost all big companies are our members, and 40 plus clients are active clients.
Government now seems to be allowing also some domestic gas into the exchange. So what kind of new projects or plans you have for IGX to, once this domestic gas comes to the market?
Domestic gas will give a lot of comfort to small buyers also, because they will also be able to buy domestic gas. When domestic gas producers will come on the exchange, they will need different delivery points. So see, currently we have designated 5 hubs in the country, and out of 5, 4 are almost, they are LNG terminals. So domestic producers generally sell at KG Basin, but they are at some different, exact point is different than KG Basin. Then there are few domestic producers are in east of the country, where it's Jharkhand or West Bengal. So we have to actually designate more domestic delivery points for those producers. So for that, we have filed application with PNGRB for approval.
India wants to, it's a budding gas economy. They want to increase the share of gas in the overall mix from 6 to 15% by 2030. What will be the impact of these high gas and LNG prices on first the country's plans, and second the impact on IGX?
Yeah, actually, this high prices definitely will have some impact on demand destruction, because had there been no such war, we would have seen growth in our, the prices would have been more stable and were feasible for many of the consumers. Many of the consumers who would have switched to gas, they have not switched. And again, they are apprehensive that what will be the gas prices in next 1 year, you are not sure. So this has actually impacted the government's vision for increasing gas consumption from 6 to 15. And of course, we have not been impacted so much because we could compensate, get compensated by higher volumes from bigger players. But otherwise, this is not for over the long term. It's not good for gas sector overall.
Thanks a lot for your time. All the best for IGX. Thank you.
क्या हाल? मत पूछ यार, फिर से स्टॉक्स में फंस गया। तो स्टॉक्स के साथ बॉन्ड्स, इंश्योरेंस, गोल्ड में बैलेंस कर। इसमें बहुत तामझाम है। तुझे 5 पैसा नहीं पता?
अब तो सबको पता है। 5 पैसा है ऑल इन वन अकाउंट। डाउनलोड 5 पैसा नाउ।
अब तो सबको पता है। Investing made easy and rewarding with 5 paisa. Investments in securities market are subject to market risks. Read all the related documents carefully before investing.
After the gas exchange, let us move on to stocks. With the economy facing high inflationary pressures, concerns are mounting about its likely impact on the markets and corporate performance. But are the current fears overstretched? Is there a silver lining for investors? Our next report dwells into what past market trends of high inflation say about the markets and the road ahead.
Record high inflation levels in India and overseas continue to dent investor confidence as disrupted supply chains due to Russia-Ukraine crisis build up price pressures on the economy. However, an analysis of historical data shows that high inflationary environments are not necessarily unfavorable for equity markets. For instance, between April 2013 and March 2014, the markets were resilient despite inflation levels of 8 to 11%. Of these 12 months, the Sensex and Nifty delivered positive returns in 8 months. Similarly, between April and December 2020, the benchmark indices gave nominal negative returns in only 2 months despite average inflation of 6.6% during the period. Overall, the retail inflation has risen 60 times on a month-on-month basis since April 2013, wherein positive monthly returns were 38 times and negative returns were 22 times. This, analysts say, is due to an environment where high demand coupled with high prices leads to rise in corporate profitability and nominal growth. Naveen Kulkarni, Chief Investment Officer at Axis Securities, believes that current inflationary pressures remain less of a worry for markets as companies are witnessing robust demand amid high prices.
So, inflation in a zone is probably a sweet spot. Inflation probably out of a particular zone or out of, let's say, when CPI were to reach double digit in case of Indian scenario, will be a very, very challenging one. Let's go back to scenarios of, let's say, 2012 to 2014. Markets didn't do much, but inflation used to be very high. It used to be 13-14%, right? That's when it was a challenge. But let's say markets in 2010-11, inflation was high, but markets did well. So it all depends on where we are in terms of cycle, where it is. See, in the current cycle, one is inflation is high, but also product prices are also very high. So in that scenario, what's going to happen is that earnings for most of the sectors is going to look very, very attractive. So my limited point here is that we are in a scenario where corporate profitability is looking very, very good. Demand is still robust. When this inflation will have a severe impact on demand is probably needs to be seen. If inflation does not come down in a more manageable zone, which is, let's say, 5%, 6% kind of a zone, which is okay from an Indian perspective, by next year, then we will have serious challenges. If inflation continues to rise from here, and it is going to be a serious challenge. If inflation is here and it slowly starts ebbing, then I think it will be very, very good for the markets.
With March CPI inflation leaping to 7% and rising above the RBI's upper tolerance band for the third straight month, brokerages expect inflation to remain higher ahead and see interest rate hike cycle to begin from June. Global brokerage HSBC, for instance, says that it raised the inflation forecast of FY23 to 6.1% as against RBI's 5.7% and its FY24 inflation forecast to 5.2%. The brokerage expects repo rate hikes to begin in the June meeting with likely 4 repo rate hikes of 25 basis points each till December 2022. The brokerage further sees 2 repo rate hikes of 25 basis points each in April and June meetings of 2023, which would finally take the repo rate from 4% now to 5.5% by mid-2023. That said, the near-term outlook for the market remains bleak as the Russia-Ukraine conflict stands in a deadlock with no prospects of peace in sight. Kulkarni of Axis Securities expects the market to remain range-bound in the short term as interest rates will begin rising given the inflation situation.
So overall, my core belief is that we are in a range-bound market for the next 3 to 4 months. Probably 16,000 on the lower side, 18,100, 18,200 on the upper side, and that's where we will remain. Post that, it remains to be seen how inflation will pan out, and thereafter we'll be able to take a call. So important factor is, of course, from a medium to long-term perspective, demand should sustain. How much impact of inflation will be there on demand scenario is very, very critical. And also the accommodative stance of RBI, how that will also continue. So there are multiple factors which are going to play out.
Given this, Kulkarni believes that commodity players will benefit from rising inflation.
So in an inflationary environment, typically the commodity sectors will benefit for sure. Interesting will be how banks will behave. Banks can probably benefit with a lag, demand for credit could rise from the banks, right? So that is a possibility. So short term, of course, there will be challenges with regards to increase in cost of funds and things like that. But over the medium to long term, I think there will be more demand from the banks, there will be more working capital. So credit growth could improve well, right? So in a nutshell, I would say that typically value stocks will do well in an inflationary scenario, and probably the high growth stocks will not do so well in a high growth, high PE stock will not do so well in a inflationary scenario.
The market action will be stock specific today as investors will continue to track the fourth quarter results. Tata Elxsi, Angel One, Reliance Industrial Infrastructure and ICICI Securities are among those slated to release their earnings today.
तुम इतना डर गए? अब क्या किया?
शेयर्स में ट्रेडिंग।
तुम्हें 5 पैसा नहीं पता?
ओए, अब तो सबको पता है। 5 पैसा पर मिलते हैं रिसर्च टूल्स, पोर्टफोलियो एनालिटिक्स और इन्वेस्टमेंट आइडियाज भी। डाउनलोड 5 पैसा नाउ।
अब तो सबको पता है, investing made easy and rewarding with 5 paisa. Investments in securities market are subject to market risks. Read all the related documents carefully before investing.
Smartphones have made trading in stock markets much easier. But what about those who still use budget phones? For them, Android has launched its Go editions. Last year, the Android 12 Go edition was rolled out in the market. Let us know more about it.
Google had first launched Android Go in December 2017. 5 editions of Android Go have been launched since then. Android Go is a lighter version of the Android operating system that most of us are familiar with. It has been designed for low-end and ultra-budget smartphones. Specifically, it is intended for use in smartphones with 2 GB of RAM or less. It has platform optimizations that reduce mobile data usage. Also, it has a special suite of Google mobile services that are less bandwidth and resource intensive. Even the memory footprint of Google Play services has been reduced. Android Go has been focusing on optimizing the latest Android releases so that they can run smoothly on budget devices. And what has been the impact? Smartphones with less powerful processors, smaller memory, and less available mobile data have been able to use Android software. Given that it works with entry-level smartphones with between 512 MB and 2 GB of RAM, Android Go has resulted in more affordable devices that have Android features that are essential for a smartphone experience. And how is all this made possible? First of all, a lighter set of Google apps such as Google Chrome, all of which require less memory, storage space, and mobile data is used. Then there is a light version of the Google Play Store. While it features the entire Android app catalog, it also highlights apps that require less data, storage, or memory. At the end of the day, most budget mobile phones are not capable of handling heavier duty apps. With Android Go, however, those who buy low-end handsets, particularly in developing countries, get to enjoy a relatively advanced smartphone experience.
इसको 30 डिग्रीज कर देते हैं। अरे नहीं यार, 45 डिग्री सही है।
We Indians disagree on everything, but we agree. SBI is the banker to every Indian.
SBI का वीडियो KYC सेविंग्स अकाउंट। Finally I agree.
SBI is the banker to every Indian.
Did you know that Android refers to a male robot, while a female robot is known as gynoid? That's all for today. For more news and analysis, log on to business-standard.com. We will be back tomorrow with our next episode. If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.